All right. It's Jared here from Crypto Plan. How's everyone going? We are just taking a different approach today, and we're going to have a look at the US dollar currency index, and we're going to just try and figure out some clues as to what has been happening and why it's been happening, and maybe what is going to happen soon. So please stick around, because this is a different one. This could lead to a couple of interesting things that we uncover. But yes, please, if you are interested in some alternative approaches, and this is definitely not saying you should or shouldn't do anything, because I would hate to be advising you to spend your hard-earned currency on something like cryptocurrency without you doing your own due diligence, because that is the most important thing you can do. I know that I do my due diligence after I make an investment, and then I start looking into something, because it gives you a bit of skin in the game. But that is definitely not advice, because I'm not a financial advisor. So, with all that said, yeah, like the video, subscribe to the channel, and click the notification bell if you are into me and what I have to say, because I am just on this journey with you and learning about things. For some reason, I cannot stop looking at the US dollar currency index. And maybe, and like, I'm willing to accept the fact that it's observational bias, third time lucky. This structure here, this bang, 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 it's the way Bitcoin crashed recently, right? So I can't stop looking at it, and I'm like, it's for me now, it is the perfect time to short, or it's the perfect time to wait for a crash to buy a dip, right? Because this is the best example of when this this bearish signaled the massivest crash in the US dollar from February the 2nd through to February the 8th. So this started the biggest downward spiral in the US currency had seen in the last kind of 50 years, right? So I can't stop seeing it everywhere, and the problem is that it's over here again. It's over here on this side. 1, 2, 3 kind of attempts at a higher high, but they're weak attempts, and it's bearish. And let's look back over here, and we'll just kind of roughly draw the trend line. So it's kind of like saying, this is the trajectory. It looks like it's going on the chart, but the reality is that it's divergence, right? So on the RSI down here, it's divergence, and then bang, off a cliff, and then just kind of just wiggled its way all the way down to 70 there, right? So that was obviously the GFC, that was when everything went really poo-poo. And since then it's kind of hovered around and hoveled around down here. But for some reason, in 2014, it gathers a bit of steam and pumps its way up again. And this is the confusing bit for me, because this doesn't make sense. To me, this should have done this bearish bearish signal, which was a price trending up weekly, a weak trend up, higher highs, but not higher lows, right? And the divergence was there, and it kind of crashed like it did, but it didn't keep going. Why didn't it keep going? Why is there a kind of a weak ceiling, a weak kind of support level there? What is stopping it from crashing below 88 at the moment? And I just think it is indecision in the market. I think it is absolute fear and indecision, because not just like retail investors or big investors, but banks don't know what to do with their money. They don't know whether to lend it out or to invest in things, or to they don't know what to do with it. Like countries don't know what to do. with their US dollars that they own. So I think everyone is just holding them and waiting for the right moment to just dump them. And where they dump them, I don't know, but it's just going to be everywhere but the dollar. And this thing is just the weakest kind of chart that I'm seeing at the moment. And I think the reason why, crypto's going bearish is because the dollar is holding on for dear life. The HODL for the dollar is holding on for dear life because people are undecided on what they want to do with them. But the thing is, once things start moving, once the crypto moves again, once the stocks move again, I am starting to see, all these kind of meme stocks and, the odd kind of stock pump up. And then, the commodities bull run really gets into gear. People are going to just flee that dollar. And I think at the moment, it is just a moment of indecision. But you can see here, since March 2015, we have not been able to break this downward trend line in the RSI, right? But on the chart, we've got several kind of divergent situations, So here to here, where it's making higher highs, there was lower lows on RSI. And then it kind of dipped, bounced off the 88, and then kicked back up to 95. And then it goes, this bullish uptrend in, the price of the dollar or the dollar. Is this other currencies fighting to devalue themselves, to make the dollar a bit stronger? Who knows? A lot going on behind the scenes that we don't know about. But the reality is that it was a weakening. The dollar was weakening. The strength of the dollar is weakening all the while the actual price of the dollar is going up. And then it kind of falls off a cliff again recently, in recent times. And this is what we know, is that's happened, is that, there's this situation where everybody's talking about it. They're talking about the dollar collapsing and this, that, and the other. And it's nearly the fact that it's being talked about are people going against that trade, because it's such the consensus trade. Are people now going against it and going, well, I'm going to go into dollars because everyone's talking about the dollar crashing. So not really sure what's going on, but I do know that this is a weak chart. Like what is going on here? Low, high, low, bounce, like this thing is weak, and it is weak every day of the week. And the fact that it is just holding on for dear life just says to me that once it breaks, once this line breaks, once this 88-cent level breaks, there is going to be a cliff edge. There is going to be one of these moves again, and we're talking about, what are we talking about? What sort of move was there? A 41% crash in the dollar. And you know what that's going to do? That is going to bring the dollar, even if we went from here, 41% crash in the dollar. If we did anything like that again, we're going to get down to a dollar being worth a 60-cent US currency index, a 60% dollar. Now, if that doesn't cause all sorts of mayhem and all sorts of inflation in asset prices and cryptocurrencies and commodities, then I don't know what will, because that is something that I'm excited about. And the reason why I'm hodling, and this hodling cryptocurrencies, not dollars, I'm fleeing dollars, fleeing currencies at the moment, because even though things are volatile, even though, everything that in my portfolio has gone up and then kind of come back down and it's barely sitting in the green at the moment, I am hodling, because if I was to sell into dollars right now and go, oh, I'm scared, I'm going to get back into dollars waiting for it to crash lower, that'll be the moment that it just kind of flies off to the upside, and I'd be like absolutely punching myself so hard. But that's just the way I see it. That's just the way I see it. It's such a easy thing to think, I want this to happen now and I want it to happen in my time frame. But the reality is it'll happen when it happens, like whoever is behind, larger controlling stakes, manipulative stakes on, trades and transfers and bigger world economic issues, they're aware of what's going to happen. They are going to be delaying as long as possible to try and get on the right side of that trade, and then it will happen when it happens. And but the chart gives us the leading indicator, right? And it's at this stage in the game where there has been so many weak attempts at making new highs for what is it for? It's 8 years. So for 8 years, it hasn't been able to make a higher high. Like, to me, that's, that, and the divergence says that the RSI is going backwards and going down on a decent slope there. That is enough for me. That is enough for me. And I've seen and played, the bearish divergence on the RSI indicator enough, to know that, like this thing is going to reverse. Like this thing is going to fall off a cliff and this thing is going to create all sorts of mayhem, but all sorts of great gains if you're on the right side of that trade. So that's my view on the dollar currency index. I'm doing that because, crypto will do what it'll do. Like if you're like me and you're happy to dollar cost average, sometimes you're winning, sometimes you catch the bottom of a trade and it goes to the upside and you're never in the red. Sometimes you think you're buying the bottom and it goes lower because of an asset like Bitcoin. So be it, like that's the reality of cryptocurrencies. That's the reality of the uncertainty of the market at the moment, is that if you think you're going to be able to time the bottom, you're not. Yes, you can wait till it turns around and buy it on the up on the other side, but that's a mayhem, like that's a panic state when things are on the way back up and things are flying hard to the upside, and then you're kind of getting in. And I mean, that's what day trading's all about, but I'm not a day trader. And if you're into day trading, this is not the channel for you. So I'm sorry about that, but we are all about just medium term, longer term trades, like things that we're looking to get in and out of with decent chunks of profits in, 6 months to 18 months, a couple of years, depending on what's going on in the macro underlying asset of the market. If it's gold and silver, it could be 5 or 6 years. If it's cryptocurrency, it's, by the end of the year, maybe a little bit longer. We'll see. All right. I'm going to leave it there. That's my take on the bearish divergence in the US dollar index. The thing is going to crash, and it's going to crash hard, but it's not going to crash overnight. Like this move, this big dip, this move played out over 6 years. The same thing's going to happen here. It's going to play out over 6 years. We're going to have the roaring 20s again. And then towards the end of this decade, that's when you kind of want to be getting back into your dollars and just sitting there and riding out some kind of a Great Depression. If history rhymes, and history does rhyme. It doesn't repeat, but it does rhyme, and we'll see what happens there. But that could be the play. That's what that's kind of my rough roadmap anyways, to trade the hell out of this next kind of 4 to 6 to 8 years, and then kind of sit in money and then wait for the crash and then buy back in. I've been Jared. This has been Crypto Plan. I hope this kind of gives you a different opinion of something today. I hope it kind of opens your eyes to something new. Crypto's red today, so I'm just trying to do a few different things. Did a mining stock earlier, so yeah, like the video if it's something that you're into, and subscribe and click the notification bell and all that, and I'll catch you on the next one. Bye now.